Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about 3 stocks that are going to be announcing earnings this week that I am going to be watching. The first of which is going to be Bank of America, which is going to be announcing earnings tomorrow on Monday, October 17th. This is a company that I continue to follow very closely and continue to be an investor of. That is largely due to the fact that they continue to be dominant in the consumer banking space, as well as they offer a nice dividend yield, currently sitting just under 3%. Now, something that I would call out is historically, the stock does not move a lot when we're talking about an earnings day. You can see that earnings, it was really the broader market here. So the stock's not really expecting to do any form of big pop or drop associated with earnings. We also saw earnings last week from Citigroup as well as JP Morgan, where they did highlight that they had an increase to their overall loan loss reserves. You can see that here on the balance sheet for any of these stocks, as well as the income statement. So something that I would call out here is you can see that the overall loan loss allowance has been decreasing from the COVID highs. However, in the event that they do increase this, that does not mean that they are currently experiencing losses, but rather they think that they may experience losses in the future. Because Bank of America is very consumer heavy, not that they don't have a large commercial loan concentration, it is important to note that they can be somewhat of a bellwether in terms of looking at their loan losses. However, loan losses for the banking sector continue to be below 2019 levels, and if you're going to see some pain in the future, I would expect that to occur in next year, which means that as the company continues to operate very profitably from higher interest rates, I think that it presents a unique opportunity for them to cash in on some of their buybacks or potentially give more money via the dividend. Due to regulatory capital ratios, I don't expect that to happen in the immediate future. However, this is one that continues to be a solid capital conservation type of stock. It's important to note when you compare the stock price over the past year or even the past 5 years that we are back in line with levels prior to 2020 and 2021. So I think that the downside here is relatively limited compared to what we've seen historically, and the company or the bank itself continues to be incredibly capitalized and should be able to continue to perform admirably. So this is going to be stock number 1 that I'm watching, and they will be announcing tomorrow prior to market open. The second one that I'm going to be watching is going to be Netflix, and I don't think that I'm going to be making a play on this just because big tech has been difficult over the course of the past few months. However, it's important to note that historically Netflix is a big mover when it comes to earnings. So primarily you can see earlier this year as well as at the beginning of the year for their Q4 earnings. The big story associated with Netflix is the lack of growth that they've seen amidst increasing competition, primarily from unique opportunities associated with Disney Plus, as well as every other streaming platform on a go-forward basis. So while the numbers continue to be fairly good, the company does continue to grow from a revenue perspective. I think the big concern here is the overall user growth. So despite the fact that revenue is increasing, are they also seeing accompanying increases in total revenue as well? That's going to be primarily what we are watching, as well as the interesting thing associated with the stock is will they continue to point to potential profitability and what will they do with that associated income? So over the past 2 quarters, they've continued to post very strong profitability metrics. Will this continue, or are you going to see increased R&D spending to remain competitive be a big pain point for them? So overall, I don't think I'm going to make a play here because the options tend to be very expensive, but the stock does present a unique opportunity due to its current levels as well as where it has been historically. So definitely one to watch. The last one that I'm going to be watching is, of course, going to be Tesla. So Tesla is down 50% from their November highs, just north of a year ago at this point in time, or rather just south of a year ago. However, you can see that the company continues to do poorly the stock price continues to do poorly amidst growth concerns, profitability concerns, demand concerns, as well as items associated with Elon Musk and his current commentary surrounding different foreign leaders, as well as his commentary or potential acquisition of Twitter. So you can see a large sell-off has really occurred over the course of the past 2 weeks, It'll be interesting to see if that kind of sets somewhat of a false bottom or if we expect that to kind of go back down. Right now, we're holding levels, that 200 level. Again, this is post-split, but that 200 level in line with kind of what we saw during the early part of 2021. The question is, do we see stock prices return to levels seen prior to the COVID pandemic, like a lot of other big tech, which would be kind of here in the $30 range? So it's something to watch. I will be looking to see if there makes a play here. Again, one of the concerns with Tesla is the fact that their options contracts are incredibly expensive. However, if the overall market bounces, I wouldn't be surprised to see this do a strong move upward. However, if they report poor earnings and it's announced that Tesla does need, or Elon Musk does need to sell some of his additional shares, I would expect that to put additional pressure on the stock on a go down basis. So it's going to be one to watch. Again, these are 3 stocks I'm looking to play and I'll be watching. And if you find this type of content helpful, please leave a like and subscribe. Thanks. Talk to you later.